Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook from July 29th, 2019, prospects for soybean demand. Right now the uncertainty regarding soybean yield and acreage will continue to be key factors in soybean pricing as we move through harvest. But as we look forward, the idea of how much soybean demand will there be and the focus in particular on China are important to think about where prices might go over the next year. So today I'm going to talk a little bit about how we're ending the 18-19 marketing year and what I see moving forward in 19-20, and maybe what kind of supply we would need to see prices be as strong as we're currently seeing in the futures market. As we move through the 2018-19 market year, we've seen really strong crush and relatively weak exports due to the trade problems with China. Crush through the early part of the market year is really strong, and we've seen it sort of pull back a little bit in the final quarter. The USDA lowered 2018 market year crush estimates by 15 million bushels to 2.085 billion bushels. I think we're on pace to do that. We would basically need to crush in the last couple of months what we did last year. It may be a little short, but we're not talking very short. And we've seen some little bit of pickup in soybean exports in June, and we saw weak exports overall this year. Right now the USDA projects 1.7 billion bushels. I think we'll hit that. We may come up a little short, we may be a little higher, but for certain what we're looking at is over 1 billion bushels that carry out when we get to the end of August. I can't see a scenario where that doesn't happen, and that places 2019-20 demand in focus. Right now, soybean demand as we move into the next market year is really focusing on China. We've seen trade negotiations kick back up, but based on previous negotiation outcomes, I'm not very optimistic for a resolution anytime soon. I think there's a pretty high probability the tariffs currently in place will stay in place through the next marketing year, or at least for a good portion of the next marketing year, despite what we've heard about goodwill buying from China. Those buying opportunities from China look to be dependent on how the negotiations turn out, so there's still a lot of uncertainty there. The other problem is African swine fever. I'm going to talk about that a little more in the next slide. What I'm showing you here is a map from the World Animal Health Organization on the African swine fever outbreak. It's been continuing throughout the end of 2019 into 2020 in Asia, and we've seen recurrences in Europe as well in some places. Right now it's hard to get a handle on how bad it is in China, but general estimates are about a 20% drop in the herd for 2019 and an additional 10% drop in the hog herd in 2020, with about a 30% drop in the breeding herd. It may be worse than that. As they try to refill the pipeline, I think recurrences of the disease are happening, and the spread into places like Vietnam, Laos, Mongolia, North Korea. This looks like a multi-year event that could hurt soybean demand in general. The USD currently projects China's soybean imports at 3.2 billion bushels, up a little bit from last year, but over 250 million bushels lower than before the disease outbreak occurred. And with what looks like larger crops in South America, I think export competition next year is going to be quite fierce. And we've heard tell of Chinese buying, but all this is dependent on trade negotiations. So when we're thinking about demand for soybeans from the U.S. in the 2019-20 marketing year, I think there's a place for strength in crush, particularly if we see finally China start buying pork from the U.S., our large hog herd and cattle herd helping support crush through soybean meal, and maybe a little bit of soybean oil help from biodiesel production. But in the export area, the tough competition from South America with tariffs still in place and lower demand in China. Right now the USDA is projecting 1.875 billion bushels of exports in the 19-20 marketing year. I don't see how that occurs under the current scenarios we face with reduced demand due to the disease and tariffs in place. So I believe the 2.115 billion bushels we're seeing for crush is close, and it could be even stronger than that depending on how 1920 plays out, but I think the export numbers are quite high. But even if we assume the USDA's consumption numbers for soybeans 1920 are correct, we're going to need a pretty significant crop shortfall to get down to even 500 million bushels of carryout in the end of 1920. What you're seeing here is the USDA July forecast for the 1920 balance sheet in soybeans. And as you can see, they've got a 795 million bushel ending stocks on 80 million acres and a 48.5 yield. Now, the potential for a much lower yield, I think, is in place. We've seen considerable late planting. With that kind of late planting in soybeans and the kind of weather we've had, particularly in the eastern corn belt, we could see the yield fall substantially. And what I'm doing here is saying, just to get back to 500 million bushels under the USDA consumption scenarios, what kind of yield might we need with 80 million acres in the second column? At 80 million acres, that's a 44.7 bushel per acre national average yield. Is it feasible? It is. The idea, though, that we would get there, I think, is maybe in the tail end of expectations on soybean yields this year. If we added 2 more million acres, and I think there's a general consensus there may be more soybean acres out there than we're reporting in the June acreage report. If I just say 2 million more acres, we need a 43.7 bushel per acre yield to get to 500 million bushels of carryout. And we need to remember, 500 million bushels of carryout is still quite a bit of carryout for soybeans. So when we see prices in the $9 range or the $8.75, $8.80 range, depending on what your cash prices are, these summer rallies on weather and a little bit of hope on the trade negotiations, it may be prudent to price some new crop soybeans if you already haven't, because we would need a significant crop shortfall under even USDA's demand scenario. And if you took 100 million bushels out of export due to the African swine fever and trade problems, you could probably see carryout still at 800 million to 700 to 800 million bushels, even with a 45 bushel per acre yield nationally. So I think it's important to remember that idea. Soybean demand is looking a little bit stronger, but the scenarios in place for exports don't bode well for 1920 exports for soybeans right now. For the 2018-19 market year in soybeans, we're looking at carrying over 1 billion bushels out this year. Into the 1920 marketing year, it looks like almost a certainty under current consumption levels. And we look forward to 1920. I'm optimistic on crush. I think the 2.115 billion bushels that USDA is projecting is close to the number. It could be even stronger. We'll see as we move into the year with the kind of livestock herd we have in the country, and maybe an increase in protein demand around the world as China falls short. Exports are another story. We've seen big crops in South America and expectations of even larger crops in 2020, which means tough competition under tariffs and reduced demand, the world's largest soybean importer. So when you're thinking about marketing new crop soybeans, these rallies in the summer may be a time to price some. It may be prudent to do that because the odds of us getting below 45 bushels an acre this year, while feasible, are probably relatively low as we look at the crop right now. I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. I look forward to seeing you around the state of Illinois.